It is Fight Night here in New York City, and I'm joined by Jim Rickards, the best-selling author, as well as a very well-known gold bug. Jim, great to have you here today.
Great to be with you, Remy.
Well, we're here on the Upper West Side of Manhattan at Stand Up New York Comedy Club. You just concluded a debate which was about gold versus Bitcoin with James Altucher. You did win, but it was a very close call. So tell me what you're seeing right now.
Well, it was a close decision. I guess if you were a boxing fan, I would call it a technical knockout rather than an actual knockout, but it was close. But I think the real winner was the audience. I think the audience got a lot of information. Hopefully they can go out listening to both of us and make better decisions based on that. But to me, the decision, the history is what it is. But if you have dollars today and you wake up tomorrow and you say, what should I buy, gold versus Bitcoin? My point was that Bitcoin is way off the top, probably going to $200, which is, it's a utility token for criminals. It doesn't really have any other use case. When it was 8,000, I said, look, it's a bubble. It could go to 20,000. Well, it did go to 20,000. That didn't surprise me. But then, like every classic bubble, it went kind of straight down from there, down halfway. It'll chug along. It'll go up and down, have good days and bad days. But this trend is going to be down. Bitcoin is not sustainable. There are other cryptocurrencies using different technology, different governance models, different ways of validating, faster, easier, smoother, more efficient, that will survive. I don't doubt that. And the distributed ledger technology, aka the blockchain, is here to stay. But Bitcoin is like the Neanderthal. They had their day, but they went extinct. Bitcoin's going to go extinct. Gold, on the other hand, is at the beginning of a new secular bull market, the third bull market in my lifetime. First bull market was 1971 to 1980. Second was 1999 to 2011. This new bull market started in December 2015 from a low of $1,051 an ounce. It's up almost 30% from there, but this is just getting started. Now, there were two nasty bear markets in between, so I'm not saying gold always goes up. Of course it doesn't, but it trends up through these bull and bear cycles, and it looks like we're in this third bull market. So if I were waking up tomorrow with cash and the choice was Bitcoin or gold, leaving all the other arguments aside, gold looks like it's on its way up. Bitcoin looks like it's on its way down.
And Jim, we don't have a crystal ball here, but we know that what goes up must come down. And we're seeing elevated prices for equity markets, and gold levels as well as Bitcoin levels are holding some key levels. So where do we go from here, and what do you expect to happen in 2018?
Well, I call 2018 the year of living dangerously. Sure, stock markets are up. They're up around the world. Volatility is an all-time low. Fear is at an all-time low. Gold's going up, but so are stocks. And, even Bitcoin hasn't gone down where I expect it to go. So the question is what breaks that? And the answer is this is all psychological. The technicians can do what they want. Fundamental analysis, you can pretty much, I think you can throw it out the window on stocks. The stock market has moved on to higher ground just on momentum, psychology, a little bit of greed thrown in. Okay, the tax bill had some effect, earnings have some effect, but those have been like overpriced into the market, and it just seems to be running on fumes at this point. I think there's a much stronger fundamental case for gold. But there are a number of things that are going to stand in the way. President Trump started a trade war the other day. Okay, solar panels and washing machines, not the two biggest sectors, but steel's right behind, aluminum's right behind, penalties on China for theft of intellectual property are right behind. The president wanted to do this a year ago. He wanted to do this after he was sworn in, but he refrained based on the advice of his national security team because we needed China's help on North Korea. China didn't help on North Korea. They went through the motions. They did a little bit, but not nearly enough. They're actually helping North Korea to cheat. So Trump said, you're not helping me where I need it. This is the art of the deal. So I'm going to slam you with some sanctions. There's more to come. Actually, Europe will be hurt by the steel sanctions more than China. So, and then there'll be counter sanctions. So we've been in a currency war since 2010. That's what my first book was about, currency wars. We're in a trade war now. But the history of the 1920s and 30s is that you have a currency war, then a trade war, then a shooting war. And I think the biggest risk is a shooting war. Obviously, that would revolve around North Korea. So, and then there's a strong opinion in the country that President Trump should either step aside or be impeached. I don't share that view, but I don't deny it's out there. So between the possibility of war, the possibility of asset bubbles, I think people are underestimating the impact of Fed tightening. The Fed is double tightening. They're raising rates, but they're also destroying money. When you reduce your balance sheet, the way you do it is to destroy the money supply. They're reducing M0, which is base money. This has never been done before. That's important to understand. What the Fed is attempting to do, what the Fed is doing, not attempting, they're doing it, has never been done before. It's an experiment. So you can throw away Milton Friedman, throw away your textbooks. We've never seen this before. I think the impact will be greater than they expect, and they could even cause a recession. We know what that'll do to stocks. So between Fed tightening, war with North Korea, the anti-Trump sentiment, the new trade war, there are enough wild cards out there that things could get upset very quickly.
And so, Jim, we know what to expect in terms of fundamentals, at least in terms of politics or geopolitical risk. But when it comes to cryptocurrencies, the reason why people are drawn to that is because they think there's an element of privacy. And you mentioned in today's debate that there is actually more transparency than people are aware of. So what do you think about people who believe that they can hide behind cryptocurrencies?
Well, the truth is you can't. I mean, the fact is, in the cryptocurrency transactions, you might not say, here's my name. I don't own any cryptos, but, it doesn't say James Rickards. But you use a private key and you use a digital signature that's encrypted, but that signature is the same one throughout the entire history of the blockchain. So investigators and enforcement agencies, the FBI and others, they love this because if you have 100 transactions, all they have to do is use forensics to link you with one, and they've got you nailed on the other 99. It saves a lot of investigative time. The IRS has subpoenaed all the records from these major exchanges. The SEC is looking at the class action lawyers have not come out of the woodwork. They filed a major case against one of the major Bitcoin exchanges. Now you're going to go into the courts, and the Bitcoin exchanges say, we don't have to tell you anything. They'll make a motion to dismiss, but let's say that motion is denied and the case goes forward. Well, now you get into what's called discovery. I mean, talk to Goldman Sachs and JP Morgan. They've had to go through the pain of handing over all their emails to the class action lawyers. This is like the Marlin and Hemingway's Old Man in the Sea being fed to the sharks, So between the enforcement agencies, SEC, IRS, Treasury, U.S. intelligence community, NSA, class action lawyers, and forensics, the idea that there's any privacy in this world is nonsense.
Okay, Jim, well, last but not least, since we're in a comedy club, I'm going to attempt to be a little comedic here. If I had the money to buy one Bitcoin or a share of Berkshire Hathaway, which one's a better investment and why?
Well, that's an easy one. I would say Berkshire Hathaway. The reason I wouldn't buy Bitcoin is because it's a bubble. It's a bubble of fraud and Ponzi all at the same time. And I make the point that the tulip mania was a bubble, but it wasn't a fraud because you got to keep the tulip. But in Bitcoin, you're going to end up with nothing.
Okay, Jim. Well, thank you so much for joining me this evening, and congratulations on the win.
Thank you.
Thank you.